Okay, so I made a show yesterday, and in the show yesterday I spoke about how the cycle is going to be the longest crypto cycle that we've ever had. And I'm not talking about adding 20 days to the cycle or 30 days to the cycle. I'm talking about a cycle that could go on for another year, maybe year and a half or 2 years. And that's the good news. The other part of the good news is that in the cycle, I think the amount of capital that's going to flow into crypto is probably bigger than you could ever imagine. Like, we'll never, ever see so much money flowing into an industry as quickly as it's about to flow into crypto. So from that point of view, it's all good news. But actually, there's also some bad news that comes with an extended, long ultra cycle like the one we are about to experience. And I want to show you both sides of the coin. I want to show you what the good news is. I want to show you how long the cycle can last. I want to show you what's going to be driving the cycle. I'm going to show you how high I think we can go when the cycle finally ends. And then I want to talk to you about the bad news. And as I say, there is some bad news. And as long as you know about it, maybe you can hedge yourself against those risks. So yes, we're sticking to the long ultra cycle theory because it is going to be a long cycle, because there's just no way that we can get everything that we need to get done by the end of October, done by the end of October. So if anyone tells you the cycle is ending at the end of October, you can tell them that I said that this time is different. And I know when they say the worst thing that you can say is that this time is different, but this time is different. And I'm going to show you exactly how. So let's get going. You know, I find these comments so funny. There's a guy here called 𝗙𝗃𝗃 who says, crazy, some people listen to this Shiller. But he's here too. What, are you not listening? You're on mute, bro. So someone says longer fun. It is going to be longer fun. So we're here now for a long time. We're now here for a long time, not good time. We're here for a long time. Wasn't run crying for 30 days till the end of the cycle. I did actually think that we were going to get a short cycle, but then you know what? When the data comes in and you kind of realize, hold on a second, there's absolutely no way that the cycle can end in 60 days. There's just too much that has to happen. The charts aren't lining up. People are force fitting this into previous cycles. No, it's not previous cycles, bro. It's maximum 1 or maybe 2 previous cycles. It's not like you've got 100 different cycles. And so when I said that this time is different, yes, this cycle is going to be different from the 2 other cycles that we've had where there have been altcoins. And I'm going to show you exactly why this cycle is different. It's going to be much longer, spoiler alert, and there's going to be a lot more money coming in. And so it sounds like that's all amazing, but I'm actually going to show that there are actually some downsides in this. And as long as you know the downsides, you know what you're getting yourself into, you know what you can actually do there. Someone says, love me long time, bro. Yes, spoken like someone, love me long time, not good time. I'm here for long time. Yeah, you come with money. You come with money, we give you love you long time. Kapunka. Yeah, bro. I told you, I had a friend of mine who went to Thailand on his bachelor party. Landed up with another man, didn't even know about it. Yeah, he found out. And then I said to him, so what did you do when you found out? He said, I was already there. So I was like, no, bro, you run. Anyway, it doesn't matter. That's for another show. Anyway, let's talk about this show. Guys, remember, if you like this video, it really, really, really helps me with distribution, right? So I'd really appreciate it if you would like this video. That's all I'm asking you to do. Everything else is free. Then like this video. I'm exiting gradually like I said I would. Always stick to the plan. Yeah. No, you see, my friend in Thailand, he didn't exit gradually. He decided to rather just stay in. His view was he was already in the moment. So to exit then. Rand says, Run is extra cultured. Why are you guys jumping into me because I'm Indian, bro? Crazy. Game is game, bro. Sheldon's bullish. But yes, guys, but Sheldon's always bullish. Sheldon is the ultimate bullish trader. I'm not as bullish. I mean, okay, maybe we should quickly jump into the actual alpha of the day today. So yes, we have a slight pump in Bitcoin. We went up to 11,900. I don't know if you guys are watching that. We went up just under 111,900. And then we rejected again. And I guess what's happening is now we're in the midst of a cool-off, right? The good thing about this cool-off is that in this cool-off, a lot of our tokens, the ones that we've been talking about, are actually firing. And probably there are a few notable mentions. Have you noticed this little pengu going left and right here? Have you noticed it on the bubbles? Can you see it? You see, that's the new thing. Josh has done something very cool there. Yeah. Now, let's phone Josh. He's actually in Dubai. Let's phone him. I wonder, no, but the Dubai VPN is not going to work. So the good news is that if you look at the charts, the tokens that we've backed are like the ones that are really, really running. Solana is now leading the pack in terms of the majors. pump.fun, I really think that now this is going to break that 0.004 level. When Pump does break that 0.004 level, all the ICO buyers who were under and then went to break even, they'll be out. And then I think we're going to go straight back up and maybe back towards 7 or 8, as I said before. Athena, another one that's making fresh new highs, 0.72. I think, yeah. So I think it's good to know that we're holding probably the strongest bags that are out there, right? We have the strongest bags that are out there. But I mean, look, and look, I hope Fefe is right. I don't think he is right, but I hope he is right, and that the bottom is in. He is actually quite good at these things. He usually can call tops and bottoms. Yeah, but I'm not sure that I would be putting any money to work yet. I still need a much longer, much deeper correction. And let's not even discuss that. I think we should maybe discuss the topic that is at hand here. And the topic that is at hand here today is 𝗪𝗪𝗢𝗪's dating experience, right? So you said you're going on a date on Saturday.
Yeah.
Is it a day date or a night date? A day date, yeah, because then it's not as like you could always say you could say I need to go to the post office. Sorry, and it closes at 12, and then you have to leave halfway through the date. Okay, we'll do another show about 𝗪𝗪𝗢𝗪's love life. We'll do something. We'll do that another time. By the way, I do think you should go much younger. I think like your age and like 26, perfect, bro.
Oh.
Perfect. I'm telling you, 26 years old. I'm telling you, that's a sweet spot. Okay. Anyway, for another, bro, it's a crypto show. Anyway, so yesterday I made a show around the 4-year cycle and how, if we stick to the 4-year cycle, then we're predicting that the cycle is going to end around October 2025. And I said that I'd been thinking long and hard about whether that's going to happen. And finally, I had the guts to say, you know what, that's actually not going to happen. And this cycle is going to become a very, very, very different kind of cycle. And then I started analyzing what actually happened. Why have we gone from 4-year cycles, which were specifically around the Bitcoin halving, into a completely different cycle or complete drivers for the cycle? Because if you understand that, then you'll understand what actually powers the cycle. And if you understand what powers the cycle, then you'll know how to react to all these things that are powering the cycle. So let's talk about the things that are powering the cycle. The first thing is, ultimately, what we need to remember now is that all risk assets, or most risk assets, are really powered by liquidity and the Fed cycle, right? And what we know is that Bitcoin usually hits its all-time high after the Fed has finished loosening interest rates, and usually in the period when the Fed is retightening interest rates. So if you look at this cycle over here, what you can see is we topped after the Fed had loosened its interest rate policy and they began to retighten the policy, and that is when we top. And usually why that happens is because there is a lag from when the Fed actually tightened to when the markets actually respond to the actual tightening. And you can see the same thing over here. First, the Fed finished lowering interest rates, and then the markets actually started to top. And so the first thing that really powers most markets and most risk assets is actually liquidity, right? And liquidity as in global money supply liquidity, but also as in interest rates. And if you look at the data here, it says Bitcoin moves in the direction of global liquidity 83% of the time in any given 12-month period, which is higher than most major asset classes, right? And this is coming from a report from Lynn Alden. So what we know is that what's powering Bitcoin now is actually global liquidity. And I think 𝗪𝗀𝗪 was like the one who publicized or popularized the money supply chart and Bitcoin's correlation with the money supply chart. But actually it turns out that Bitcoin is the most directionally aligned asset with global liquidity. So what you could say then is, well, then we should just look out for global liquidity. And at the majority of the times, you'll be 100% right, but there will be some exceptions. Also, what I started looking at yesterday was like, let's look at the cycle and just let's look at how the previous cycles have actually played out. And what you can see is that in the previous cycle, 355 days before the end of the cycle, the others chart actually broke out. Others being the altcoin chart actually broke out. Now, when I say broke out above its previous all-time high. In this cycle, we are already 1,035 days in the cycle. Now, just to give you perspective, the last cycle in total was 1,065 days. Now the cycle is 1,035 days, and the others chart hasn't yet broken its previous all-time high. Maybe a better depiction of that is ETH. When ETH broke out, we had 335 days after ETH broke out before we reached the cycle top. In this cycle, actually, ETH hasn't broken above its previous all-time high. And so there's just no way for me to reconcile that the cycle is going to be a repeat of last year's cycle. And so if it's not going to be a repeat of last year's cycle, then what is it going to be? Well, the answer is it's going to be a much, much, much longer cycle, right? And you can see it in the beginning. If you look at the charts, you can see like from the first halving of Bitcoin to the cycle top only took 367 days. From the second halving to the cycle top took 526 days. From the third halving to the top took 548 days. So naturally, you can see the cycles are actually getting much longer because we're almost 511 days. 19th of October will be 548 days here. So what you can see here is that you can see that naturally the cycles are getting longer. So the question is, why are the cycles getting longer? Well, the answer is actually a very simple answer, right? The reason why the cycles are getting longer is because if you look at the first cycle, the amount of capital that you needed to move the first cycle wasn't very much. In fact, if you go back to Bitcoin's first cycle, and I'm just getting you this data from CoinMarketCap, and you look at the market cap data, and you look at what happened in the cycle, you can see that the market cap, the total Bitcoin market cap as at 20 December 2017 was $297 billion. It wasn't even $1 trillion, it was tiny. And if you look at the total market cap, what you can see is that the amounts are very small. In fact, up until, I guess, September 2023, or maybe in the previous cycle, the data doesn't go back that far, but the market cap was very, very, very small. Now, when you have a small market cap, small retail investors can actually move this market, right? As the market cap grows, it takes more capital to actually start moving the market. So to move this market, to move a market that was a $65 billion market, to move that up, well, you could just use a bunch of retail investors. To move a market like this up, where the market cap is around $4 trillion, it's much, much, much harder to do. The first amount, or the first market, could easily be moved by retail investors. The second cycle and the third cycle, it becomes much harder for the retail investors to actually move the market. And so what happens is you start becoming reliant on TradFi and TradFi rails, right? And so what's moving the market in this cycle is the ETFs or the treasury companies or the fact that now pensions are going to be investing. So what is actually moving the markets now is integration into massive funds. And what that means translated is basically integrations into traditional markets are what's powering this market right now. And the market is just way, 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 way too big for retail investors to keep powering it. And if we are going to be powered by these TradFi integrations, which are happening very, very, very fast. I mean, if you think about not so long ago when the old administration was in, we could hardly get ourselves an ETF. But now everything's changing and it's moving. This administration is moving lightning fast and they're breaking shit left, right, and center, breaking shit in a good way, right? We've got ETFs. We're probably going to get ETFs with staking approved. We've got Trump basically saying that no bank is allowed to unbank crypto people. We've got treasury companies that are listed. We've got 401k plans that can now start investing in Bitcoin and crypto. You've got the FASB accounting rules, which have actually changed so that anyone holding Bitcoin on their balance sheet can recognize the profit or the loss in the period where the profit or the loss happened, which is very different from what the situation was before. And so what you're starting to see is you're starting to see an administration that's moving at a lightning fast pace to integrate us into the traditional TradFi system so that we can access their capital. And the good thing about this capital is that this capital is not volatile. This is not capital like retail capital, which goes in and out of the market very, very, very quickly. This is capital that once it's invested, once a pension fund invests or makes a decision to invest in Bitcoin or invest in ETH, they don't run away after the first dip. They'll end up holding this thing for 10 years, 20 years, 30 years. They'll end up holding it in index funds. They'll end up holding it as part of much more diversified portfolios. So the good news is that it's going to be a much longer cycle. The good news is that there's going to be a lot more money flowing into the cycle here, right? And you could, the other piece of good news is that it's happening at a lightning fast pace. The integration of Bitcoin and crypto with TradFi rails is happening faster than we could ever imagine, right? Like just yesterday, we actually had the SEC and CFTC come out together in a rare statement where they come out together, and they basically said that absent an exception or appropriate relief, the CEA requires that certain leverage margins of financed retail commodity transactions can be conducted on CFTC registered designated contract market or non-FTC foreign board. One such exemption is for retail commodity transactions listed on SEC registered National Securities Exchange. Today, the division provides their view that DCMs, FBOTs, and NSEs are not prohibited from facilitating the trading of certain spot crypto assets. Basically, what they're saying is you don't actually need a crypto exchange to trade crypto. We don't need a specific license. You can actually trade these things on any SEC registered, CFTC registered exchanges. And that is a massive thing here. It's exactly what Paul Atkins promised us. He said market participants should have the freedom to choose where they want to trade their spot and their crypto assets. And basically, this comes on the heels of another announcement where they basically said, look, all these international exchanges that weren't allowed to operate in the United States, they'll soon be able to operate in some shape or form in the United States. And so this is happening now at a lightning fast pace. The next big announcement that we have probably this week is that MicroStrategy is actually going to be added probably to the S&P 500. Now, who would have thought that a stock that basically leverages Bitcoin would be added into the S&P 500? And there's massive implications from being added to the S&P 500. I mean, for one, you get index funds which track the S&P 500, which now have to basically hold MicroStrategy. So because the index tracking funds have to mirror the index, then now they have to buy MicroStrategy, right? And the only reason why we could get this is because in order to be included in the S&P 500, the business must report positive earnings in its most recent quarter. And because of the FASB accounting rule changes, which we spoke about earlier, MicroStrategy actually reported they reported earnings where they finally made profit for a quarter, and because they made profit, they can now be included in the SP 500. Another thing that's happening here is someone says this is like a done deal. It's a done deal. So you're now going to get massive buyers having to buy MicroStrategy and indirectly adding Bitcoin to their balance sheets because this stock has now hit the S&P 500. The next thing that happened yesterday, also quite a big thing, which just shows you how we are starting to be more and more integrated into TradFi, is that Coinbase basically came out and said it announced the launch of a Mag 7 plus crypto equity index, which means that they've got the Magnificent 7 plus a crypto equity index, which is basically going to trade on Coinbase, right? And it's going to be trading like that with leverage. So imagine all of a sudden now you can now trade your crypto and your equities with leverage on Coinbase using a derivative. So Brian Armstrong said, we're diversifying our US derivative platform beyond single asset, Bitcoin or ETH, for the first time launching a new crypto equity index. So what you can see is that what's happening now is, and you can also trade X stocks on blockchain. So what you can basically see now is that we are simply now integrating into the traditional financial system, which means that we are going to start playing by their rules. We're going to start moving when they move, and we're going to start stopping to move when they stop moving. And it's not going to be this isolated industry where we set our own rules and our own timelines for when we get pumps, when we don't get pumps, etc., etc. Now the rules are driven by TradFi, and the reality is that because the rules are driven by TradFi, we actually have a playbook, because it's not the first time that a market has actually been moved or been dictated or moved into TradFi and then got all the benefits and all the downsides that came out of being integrated with TradFi. Because the last asset to do this, or one of the last assets to do this, was actually this asset you may have heard of. It's called gold, right? It's like a poor man's Bitcoin, basically. It's like you have to carry it around everywhere. You can't cut it. You have to melt it if you want to share it with people. You can't carry it. You need armed guards and security and stuff like that. I know it sounds absolutely crazy, but actually there is this asset. It's called gold. You know, remember that asset? Like you can even use it like to do fillings and shit. I got some friends. Yeah, and they got like gold fillings and that. I mean, yeah, you could never do a filling with Bitcoin. No. So long story short, when gold came into the financial rails, what we realized is that it started off very slowly, but then it got a sustained up 8-year bull market, right? And that's what happened. So if you look at the flows in gold on the ETFs in gold, notice how in 2003, only $100 million flowed into the first ETF. And then in 2004, $1.5 billion. And in 2005, $3.3 billion. We get those flows in a day. Now, granted, the money's changed a lot. But let me tell you, like $100 million is not that different. I mean, it's different, but it's not that different from 2023. And so what we can see is that we can see that when you are integrated into TradFi rails, then the results comes from like it's a multi-year result cycle, right? So initially we were driven by retail investment. Now we've integrated more into TradFi, and we've spent a long time building the rails, and we are spending a long time building the rails into TradFi. And once we're in TradFi, then we get to benefit from massive bull markets. Like gold had a 7 or 8 year actual bull market, whilst the road to adoption started to be open. What is the road to adoption? First, it's ETFs. Then it's 401ks that can invest. Then it's things like treasury companies. Then it's actual integration. I mean, you've obviously seen that they are actually integrating. And so the first one takes a whole long time to pave the way. And then there's almost like a playbook. And same thing with treasury companies. Like you think about this. BMNR, Tommy Lee's treasury company, is now the second largest treasury company in the world. And the only one that's bigger is MicroStrategy. Now it's got $8 or $9 billion worth of ETH, right? Now it reached this in months versus like what took MicroStrategy 1,200 days. So once the rails into TradFi are done, then the road becomes much more open. And when you start off, if you compare like Bitcoin and gold, like Bitcoin's got 80 billion on July 12th, 2025, Bitcoin had 80 billion AUM. And now Bitcoin's got like, and that's compared to the gold ETS, which you can see how long it actually took them to get there. It took them more than 20 years to get to the same kind of assets under management. So it just shows you how much quicker things are happening. So longer cycle, much more money coming in. So those are the good things. But there are actually one or two bad things, and probably worth talking about the bad things of this very, very, very long cycle. The first problem with this very, very long cycle is it's like being at a fun park and riding the roller coaster. There's no very long roller coasters that have big ups and big downs. The higher the ups and downs, the higher the volatility, the shorter the roller coaster, right? And so the problem is that I think what's going to happen, one of the big things which is going to impact all of us is that if you look at the volatility around Bitcoin, the Bitcoin's volatility is declining quite a lot. And what you can see is actually starting to tend very much towards gold. This is the volatility ranking for Bitcoin. You can see it started off in 2020 being the most volatile asset. Today, NVIDIA is actually more volatile than Bitcoin. We're moving on the downtrend. You know, soon we'll be below NASDAQ, and then we're going to mirror gold, and we're going to become a non-volatile asset. Now, the problem with a non-volatile asset is that I think the main reason why we love this industry is because you could go up, down, up, down, up, down in a day, and you could make huge life-changing money, right? Problem is that as you get later and later and later in the cycle, what you can see is that the swings become, like the highs become lower and the lows become higher, and it actually loses its fun. And when I say fun, I define fun as fun and also the ability to make money, right? And so the days of being able to make 100x and then lose 100x and make 100x are basically pretty much, in my opinion, dying down. And what that means is that for those people that came here to try and make the same returns that we made in the previous cycle, they're going to be forced to go higher up the risk curve, or they're going to be forced to do things like go and play memes and stuff like that, just like in normal assets. So the one downside for me is that there's not as much volatility. Now, there's an upside in that downside, like not as much volatility. Okay, maybe the corrections also become less. You can kind of see it, like our corrections used to be 40, 35, 25, 30s. Now they're small, like they're 14s, 12s. Like if you compare those corrections to the 2017 corrections when we thought that the whole world was going to collapse every time that the Fed spoke or whatever else, very, very, very different. So one of the downsides here is that there's going to be less volatility and less opportunities to make life-changing money. The second, so the good news is longer cycle, more money, less volatility. But the bad news is that there's also going to be less volatility, which means that there's going to be less opportunities to make money. The second downside here is that in crypto, up until now, if you found your niche, if you focused on certain products and stuff like that, because there was very little information and very little research, it was very easy to make money, because the more research you did, the more information you had, the more money you could make. It was pretty simple. But now the thing is with TradFi that they come with a lot of money. When they come with a lot of money, they basically have these, they bring research, they bring capabilities, they bring AI systems, they bring trading systems. And so what that does is it brings the market into kind of equilibrium, where literally the only thing that you can win is you can win if you get information really, really, really before anybody else gets it, which is why, like, when you think about TradFi terminals, they position them very close to NASDAQ so that they get the information first and they can place the trade first, right? I switched off my terminal today. I was like a good boy, but let's put it back on because I know a lot of us are watching the news. I'll open the terminal here. Okay, we'll keep a terminal running in the background. So, okay, here goes addiction. Has pump.fun broken that level yet? Hold on a second. Let's just quickly look at pump.fun and see. Hasn't broken it. It'll break this level. Okay, now you guys can hear the trading terminals open here and the trades are coming through. I'll show it to you guys in a second. So volatility on Bitcoin going down, fun going down, returns going down, ability to make life-changing money starting to go down a little bit. Why? Because the TradFi guys bring much more, many more tools and stuff like that with them. And you can kind of see it in these charts over here. That's the first cycle, and you can see the market cycle bottom ROI. Look how quickly we got our ROI in the first cycle, and then look how long it took in the second cycle and the third cycle to get the ROI, and fourth and fifth. So it's becoming much longer and much harder to actually do that. Also, we're going to be driven by global liquidity. It's going to become a game of global liquidity, just like gold, just like stocks, just like everything else. The more liquidity, the more money. It becomes a much simpler game because it comes down to one variable. That's like liquidity. That's it. The whole market cycle pretty much gets driven by liquidity. So in a nutshell, I think where we land up is we kind of land up having to prepare ourselves for like a different race mentally. So we were prepared for like the 400-meter sprint, 400-foot sprint for the Americans. No, it's not 400 foot. It's 1,200 feet sprint, more or less, 1,300 feet. But now, actually, we're going to be running a marathon. We're going to have to be running a marathon. Basically, change your tactics, because there's not going to be this in this cycle. There's no such thing as this crazy, mad, crazy alt season. I don't think that that's actually going to happen. Yeah. So let me know what you think. Let me know about what you think about the long cycle theory. Meanwhile, I want to show you two things. One is there's a new version of real world assets on Solana, and it's actually, I think it's quite genius. I just thought probably worth mentioning it. It's called cards. So effectively, what this is, there's a lot of these, but the token's called cards. And again, guys, I don't know this token. I don't know the founders. I've never spoken to them. I just came across it. It's been on my feed. It's called 𝗘𝗃𝗃𝗗𝗏. Now, what this 𝗘𝗃𝗃𝗃𝗃 actually is, if you've got Pokemon cards, real life Pokemon cards, you send them your Pokemon cards to like a place like Fort Knox, and then they have a marketplace, and they give you like a authenticity certificate, and you start trading it like you trade NFTs. So you're actually trading real world assets, which are these playing cards. So like if you've got lots of Pokemons or whatever else, you can actually sign up and you can actually land up trading them. Again, I don't know the tokenomics here, and I haven't spoken to the team, but I think it was just very cool to see like a different version of real world assets happening on Solana. It is a real world asset. Trading cards are very, very, very much a real world asset. Yeah, let's look at a couple of other things. So first thing is, there was some confusion about the terminal. And I quickly just want to go through this confusion to make sure that there's no more confusion about the terminal. So here's the trading terminal. As I've said to you guys before, I think that it's one of the most powerful trading tools that you can actually have. Why? Because what it does is it scrapes accounts in real time. And you got this information 1 millisecond after it was published. This information, you got 203 milliseconds. Every time it beeps, it filters out the tokens that could be part of the post and allows you to trade in and out of those tokens in milliseconds. So like example, if I was watching when this tweet came out, I could have just pressed that. That's it. My position's open. And if I wanted to close the position, I'm closed. And so it gives you a speed edge, right? It gives you a speed edge. It gives you the ability to trade quicker than everyone else. And yeah, people said, I love that sound. So there was a little bit of confusion. So I just want to clarify the confusion here. So this product here it's called 247. It is a terminal that is going to cost, or does cost, $599 a month. In order to launch it, we've made a launch special that said you pay $99 for the first 3 months. Thereafter, as long as you remain a member, you pay $199 a month instead of the $599. This is going to be extended up until the end of September. At the end of September, you're still going to pay $99 for the first 3 months, but then you're going to pay $299 a month. At the end of October, it's going to be $399 a month until eventually we get to the $599 price point. My suggestion is get in early, right? Because then you lock in your price at $199 a month if you decide to stay as a subscriber to this product forever. And now listen to the news. Can you hear the news coming out? Holy moly, what came out there? Okay. Just look at the amount of news that's coming out. I can't even. Okay, US July opening 7.18. Okay, there's no trade there. Okay, there's obviously economic data came out. Holy shit, look at the speed at which the news is coming out. Okay, there's someone at the Fed speaking. He says, firms can't absorb higher tariffs for much longer. So you see every bit of news that comes out. So like, for example, it says core durable goods revised. Okay, now this is, it'll tell you which tokens you can trade with every, like here it says TA. Okay, a perp volume on BSC is growing. BSC is now the third largest chain for perps. Can I buy BNB on that? Look at how fast the news is coming out. Now it's crazy. It's fun now. Now it actually becomes really, really, really fun. So if you want this, it's $99 a month for the first 3 months. Thereafter, it is $199 a month unless you're part of Frontrunners. If you're part of Frontrunners, then you pay $99 forever. So you sign up now, you pay $99 forever. Also, guys, remember, if you trade on Bybit, we are having our, they're having their big, what's it called? Their big campaign, their big trading competition, World Series of Trading. So sign up and actually join our team, because the bigger the team, the higher the chance you have of actually winning. I see we've got 79. Okay, it doesn't matter. What, has the trading started already? Okay, we better start. We better in it to win it, bro. Okay, I'm gonna have to sign up. So sign up for the competition. Let's start trading. Let's actually start winning this. We need to start winning this. So what you need to do is you need to go here, sign up to Bybit. You get up to $30,000 deposits, and then sign up to our squad. And then the bigger the squad, the more chance we actually have of winning. Holy shit! Listen to what's going on in that news terminal. I feel like just sitting here and news trading. Yeah, class is dismissed. If the rest of you want to sit here and news trade with me, that's great. The rest of you can leave. It's all fine. ETH, Warsaw, and Golem, what's on? Okay, there's not much news coming out there. Jobs opening 7.18 versus 7.3. Okay, so nothing's happening really on the job openings. All right, I will see you guys again tomorrow. Remember, sign up to the news terminal and sign up to our squad on Bybit. Until then, trade well, my friends.